A very warm welcome to today's webinar on the key role of economic policies on tax and debt in mobilizing resources to realize the Convention on the Rights of Persons with Disabilities. My name is Mirjam. I'm the head of Advocacy at CBM Switzerland, and I will be moderating today's webinar. I would like to start with some housekeeping rules. This session is being recorded and they'll be posted online after the event. International Sign Language interpretation is provided. The interpreters are spotlighted for you. Live captions are also available for this event. Click the CC closed captions at the bottom of your screen, or click on the external link that is provided in the chat. In your menu, you will find a chat box and a questions and answers box. Please use the chat box only for technical questions related to this webinar, and use the questions and answers box for questions that are content related to this webinar. You can consult the program in the chat box for an overview of the speakers and topics covered today. Our distinguished panelists will speak to the question, how can Global North government policies on tax and debt affect the resources available to uphold the CRPD in a Global South? I am very happy to welcome Polly Meeks, independent researcher and consultant on inclusion of persons with disabilities. Polly has 14 years experience in scrutinizing public spending with a particular interest in economic justice and the rights of persons with disabilities. She has worked on a wide range of projects on CRPD implementation and on public spending to tackle inequalities on behalf of organizations in the civil society, think tanks, and UN sectors. She's as well a fellow of the Institute of Chartered Accountants in England and Wales. Polly will lead you through today's webinar. Polly, the floor is yours.
Thank you so much, Mirjam. Can you hear me okay?
Yes.
So today we're meeting against a very positive backdrop in the context of the rights of persons with disabilities, because the Global Disability Summit is ongoing. And as many people here will know, there've been a really high number of very positive commitments. I think it was over 1,000 positive commitments at the last count. And just to focus on the Global North countries that we'll be looking at today, it's been very welcome that the UK has launched its new disability inclusion and rights strategy yesterday, along with 18 further positive commitments on the inclusion and rights of persons with disabilities. And it's also really positive that Switzerland has committed to develop and implement an action plan on the inclusion of persons with disabilities in international cooperation. But there's also a challenge here, because every single one of those 1,000+ commitments that's been made also needs to be financed. Now, financing implementation of the Convention on the Rights of Persons with Disabilities, the CRPD, is a really wide-ranging issue. But at the end of the day, every single obligation in the CRPD does need some funds to be implemented. Just to give a few examples, funds are needed to make sure that services, education, health, employment programs are accessible and inclusive. Funds are needed to put in place social protection programs that can ensure the enjoyment of an adequate standard of living by persons with disabilities and compensate for the extra costs of disability. Funds are needed to make sure that organisations of persons with disabilities can hold governments to account for all the commitments they've been making. And those are just a few of many examples. So this financing imperative leads to a policy coherence question, because clearly, to implement these commitments, governments primarily have responsibility to make sure that their own economic policies put the resources in place. So if commitments are made in the Global South, it's the responsibility of Global South governments to align their economic policies with the CRPD. But Global North governments have a responsibility too, because their economic policies can have an impact on the resources that are available in the Global South. Now, in the context of an event like the Global Disability Summit, often we're very focused on the resources and the economic policies that Global North governments put in place through their international cooperation programs. But actually, there's a wide range of other economic policies too, for example, on tax, on debt, on trade, that can sometimes have an even greater impact. And that's where we're going to be focusing today. Now, obviously, the cross-border effects of global North governments' economic policies is a massive topic, and we can't do it all justice in the space of this webinar. So as a starting point, we're just going to focus on a couple of dimensions: tackling tax avoidance and tackling unsustainable debt burdens. We'll probably focus most on tax avoidance, but we'll touch a little bit on debt burdens as well. We're going to take a case example-based approach. So we're going to be focusing on just a few countries. And this isn't because we think those countries should be singled out as the only ones where this is an issue, not at all. It's more just because this is such a complex and potentially quite abstract question that we thought it would be useful to anchor it in the situation of a couple of specific countries. But before we get into the details of global North economic policies, we want first to get a sense of what's really at stake when it comes to resourcing the rights of persons with disabilities in the global South. And for this, we're delighted to be joined by Meenakshi Balasubramanian from the Centre for Inclusive Policy. Meenakshi is a co-founder of Equals, the Centre for Promotion of Social Justice in Chennai in India. And she's also currently an associate with the Centre for Inclusive Policy. Meenakshi is a long-time disability rights activist, and she has reviewed the Indian Union and states budgets from a disability perspective every year since 2012 for the People's Budget Initiative, led by the Centre for Budget and Government Accountability. She holds a Master in Commerce and a postgraduate diploma in Human Rights from the Indian Institute of Human Rights in New Delhi. Thanks so much for joining us, Meenakshi.
You're welcome, Polly. Nice being here, and thanks for inviting me.
Now, your work on India's budgets has revealed some very worrying statistics about budget allocations for the rights of persons with disabilities. Please, could you share with us some of the most recent statistics from your work?
Yes. So so the reason statistics is that the social sector allocation for persons with disabilities as a comparison to GDP has been only at 0.05%. And when we say social sector, we have taken components such as social protection, employment and training, and education, of which only social protection has been a major contributor to this fund. So it is around 0.04%. And if we look at it over a period of time, it is constant at that level. Like, for example, 2019-20, 2021, it's at 0.04% of GDP, the social protection part. And now it's taking a declining trend. This, I feel, is much worrying. And if you look at the social protection itself, the major component of social protection is the cash transfer, as the country is focusing. And given the pandemic, it's still persisting, and its intense impact on persons with disabilities, we cannot undermine those aspects. And the only announcement made by the government for persons with disabilities is at the beginning of the pandemic, when the government announced a package called the Prime Minister's Garib Kalyan Yojana. They claim that 10% of the GDP has been earmarked for that particular package to bring people out of the impact of the pandemic. However, only 1% of it has gone for social protection, which is on cash transfer, and of which the only announcement for persons with disabilities has been a transfer of 1,000 rupees in a period of three equal installments, which is 300 per month, which translates to $0.13 per person per day. However, it amounts to only 0.0006% of the overall package that aims at poverty reduction and uplifting people from the impact of the pandemic. So this is a great cause of concern, whereas the country has committed through the Rights of Persons with Disabilities Act, which is to implement the CRPD, to earmark at least 5% of the resources allocated for poverty elevation programs for persons with disabilities. So this is kind of a cause of concern. And also where the money comes from, where is it? So given that cash transfer is the major allocation that the country is giving for persons with disabilities, or looking at social protection. It's not just the union, it's across the state. So majority comes from the state government, and a small portion, which is 15 US dollars come 14, around 14 US dollars comes from the union government. But however, put together, if we look at it, it translates to between 70 to 0 to 70%. I mean, some 10 to 17, 5 to 17% of the international poverty line, which is $1.90 per person. Even that actually is less, because we cannot have one size fits all for persons with disabilities. We need to take into account the disability extra cost. But still, even with that comparison, baseline comparison, this is where we stand. And the 70% is also from 3 states, and majority of states, as many as 22 states, have less than 10% allocation, less than 10% coverage, basically benefit, in comparison to the international poverty line. This is really worrying.
Thanks so much. Thank you. Those very worrying statistics. Please, could you tell us a little bit more about what this would mean in terms of some of the gaps in the services that are provided for persons with disabilities?
So when we look at the current financial year, like our budget for the 22-23 is out. And if we did a quick analysis of the union budget alone, because the states will come up with their budgets at different point of time. So we find that the union budget has declined from the last financial year in comparison to GDP, which is at 0.008%, and it has declined from 0.009%. However, if we look at the allocations, we could get disaggregated data only from 3 out of the many ministries at the union level, which is the nodal department, the Department for the Empowerment of Persons with Disabilities, Health, and then Rural Development, basically, which implements the National Social Assistance Program, which is the cash transfer program. But if you look at the allocation for nodal agencies, which is implementing specific programs for persons with disabilities, like assistive devices, like rehabilitation services, which is critical for persons with disabilities to participate, we find a marginal increase of 3% from the previous financial year. However, if you just go back, the last financial year saw a decline of 12% from 2019-20. So we have to catch up with that difference gap. And also we need to catch up with what is required by persons with disabilities in terms of provisioning for assistive devices, provisioning for rehabilitation services, because the rehabilitation services has declined, and also for assistive devices, the government, from among those who are advised to have assistive devices in the country, only 35%, have access to those. And out of that, only 9% are accessing the government services, in-kind services, in terms of, so this is a huge gap. And also we find that in the last financial year, from the annual reports of the government, nearly 35,000, more than 35,000 assistive devices, which was due for distribution, has been stalled because of the pandemic. However, there is no roadmap or plan by the government to reach those assistive devices for persons with disabilities could be observed. So, and also, if this is the case, then large number of population of persons with disabilities are buying assistive devices, which is huge cost to the individual and families, considering the marginalization, economic marginalization, and the social marginalization experienced by persons with disabilities. So this is actually the status. And if you look at the cash transfer program, we are seeing a reduction in the budget estimates compared to the previous year. This is kind of sad. And we don't have, the health sector doesn't look at universal health care for persons with disabilities, compensating disability extra cost, or specific requirements of persons with disabilities. However, majority of allocation goes for running psychiatric institutions. And one of the program which contributes to community living for persons with psychosocial disability, which is the National Mental Health Program, which we are looking at to be a transitional program to community living from institutional living has the same allocation for the last 4 years, which is very small compared to the allocation to the institutes, which is not even 10% of the allocation for institution. So these are some of the worrying facts that we found. If you look at, this is the way forward.
Thank you so much for sharing that with us. Thanks very much indeed. And we
Thanks,
hope to
Polly.
come back to this a bit further in the questions.
Thanks.
Now, financing the rights of persons with disabilities and addressing some of the issues that Meenakshi raises is, as we've discussed, primarily the responsibility of national governments. And in fact, some people in the audience today may also have heard Meenakshi speak yesterday in a really cool event that was looking in much more detail at national government's responsibilities in relation to CRPD compliant budgeting. But the international community has its responsibilities too. And one of those responsibilities is to make sure that they do all they can to stop multinational companies from dodging their taxes. Now, tax dodging is a critical issue because of the amount of money that's at stake. For example, it's estimated that last year, India lost more than $16 billion on an annual basis due to corporate tax abuse. And globally, it's estimated that annual losses to cross-border tax abuse would be enough to cover the cost of fully vaccinating the global population against COVID-19 more than 3 times over. So this is a big issue. Our next speaker is going to help us understand a bit more about the steps that global North governments can take to help prevent corporate tax abuse from taking place, focusing on the example of the UK. So we're delighted to welcome Matti Kohonen, who's the Executive Director of the Financial Transparency Coalition. The Financial Transparency Coalition is a coalition of 11 civil society organisations across all continents that advocates for a more just financial system, advancing both human rights and environmental protection. Matti is one of the founders of the Tax Justice Network in 2002, and he's worked for 2 decades in civil society, linking tax justice to public services and human rights. He started at the Financial Transparency Coalition in April 2021. Thanks so much for joining us, Matti. I'm going to hand over to you now.
Thank you, Polly, and many thanks for inviting me to speak at your event. And I'm very pleased to link the issues of tax justice to rights of persons living with disabilities. Our work has already, in our coalition, addressed ways in which we link with gender justice and gender budgeting. And I wish we can also continue to work on linking further with addressing inequalities linked to disabilities. I will now share my screen to share my presentation. Here we go. 1 second. So I've been asked to focus on the UK, as was earlier mentioned. Of course, the issue of impacts of one country's tax policy to enjoyment of rights through raising revenue for public expenditure is a global problem. But I will focus this time on how UK's tax policies affect the capacity of countries in the global south to raise revenue and to therefore allocate that for addressing concerns of persons with disabilities. Just some basic notions first to start off with. Access to social and economic rights in particular, but also civil and political rights, all SDGs require resources. We require resources to run our government that meets basic rights through the judiciary. We also need especially resources to meet the right to health, right to education, social protection. And the SDGs have been estimated to require an annual additional expenditure of about $2 trillion US dollars, and some of the SDGs that require the most public resources are health and social protection and education. Countries currently collect very different amounts of revenue per GDP. Some estimates from the IMF state that countries in the global south vary in terms of their tax collection capacity from 9% of GDP to 11% in Guatemala, 14% in Ghana, 18% in Kenya, India, being a federal state, collects at federal and state level. The combined effort is probably approximately 19% of GDP. However, the average in OECD countries in the global north is 33%. And in some European countries, such as Denmark, it is approximately 45% of GDP. This provides very differential resources to address the needs of persons living with disabilities and to address the duties of the state to meet its development goals and addressing disabilities. However, Global South countries collect very different revenues. Countries in the Global South depend far more on revenues from corporates. That is, in the African context, 19% of the total tax collection is from corporates. In Latin America and Caribbean, 16%, while in OECD countries of the Global North, this is 10%, and in some cases as low as 6%. And there are countries with zero corporate tax rates who do not collect anything at all from corporates. This creates an asymmetry between countries in how they view the importance of taxing corporates. What we have seen is that revenue leakages, so missing revenues that should be collected, estimate in the Global South constitute 200 to 500 billion. IMF estimates 200 billion. The Tax Justice Network estimates approximately 500 billion missing revenues. Illicit financial flows, which also include unreported trade of minerals, wood, timber, wildlife and fish and other natural and other resources cause an additional estimated, in this case, 88 billion of resource loss for African countries alone. That is in itself a major problem of resource loss. And if that were to be taxed, it could generate billions of further revenue. We also have, of course, the related issue of a lack of budget transparency, especially in priority areas for addressing the needs of persons living with disabilities, lack of disaggregated budgets, especially outside of very specific budget allocations that are earmarked, as addressed before. So what is then the role of the international community? Of course, states create domestic tax policies, mostly for domestic purposes, but states face trade-offs. They try to balance economic growth, and the assumption is lower taxes, more growth. We don't believe in that assumption, but that assumption is still promoted by the World Bank in their Doing Business, as well as the Business Enabling Environment report that is due to follow the Doing Business report that gives more scores for countries that lower their corporate tax rates and also lower their social protection systems. However, countries also want to advance equity. And in order to advance equity, countries need to mobilize revenue. So there's an inherent policy conflict that we're trying to balance between social policy aims and the assumption that economic growth is brought together by lesser taxes. And we are challenging, if you like, that assumption, because it is not true. High tax countries actually have very high and efficient economies as well. So that is not the case. Lowering corporate tax rates is a trend. We've seen it from the last 10 years, from 2010, or the last 20 years from 2020. Average corporate income tax rates across the world have fallen from about 27% to approximately 20%. This is what we call the race to the bottom. This is further impacted in so-called special economic zones or economic zones where those rates are even lesser, or tax incentives that give incentives to specific industries. However, countries have recognized that they have extraterritorial and obligations to other countries to make sure you don't erode the revenue of other countries. This is subscribed in the SDGs, in the Global Partnership for Development, in the Sustainable Development Goals. It is subscribed in the Financing for Development Addis Ababa Agreement, that countries will help one another to mobilize revenue, to advance tax cooperation. And because of that, we have a global debate about are the multinationals paying the right amount of tax in the right place at the right time? And we feel that that is still a debate that is ongoing. We had the G20 last year to decide on a global minimum tax rate. They decided that that rate is only 15% and only applies to the 100 largest companies. We felt in civil society that this rate should have been 25% and that it should apply to a much wider group of companies that operate in global South countries in particular. And the revenue distribution of that favored headquarter countries, so countries where corporates have their main office, and that tends to be the global north. So we called the inequity of that deal, and we hope for a better deal as this deal develops. We also see that countries sign treaties with one another, and here I highlight, in this case, the UK's role. However, this also applies to many other countries. UK has a total of over 130 tax treaties, bilateral tax treaties, that distribute the right of what transaction and what company is taxed in a jurisdiction. They especially say how dividends, so payments to shareholders, are taxed, and how payments to foreign shareholders are taxed. And research by ActionAid found that 13 of UK's bilateral tax treaties were, in a sense, harmful because they had zero or nearly zero rate taxation for payments of dividends to shareholders abroad. These restrict the ability of global South countries to tax foreign companies and their shareholders. Another concern was how when you sell a company, many countries impose capital gains tax. So you tax the profit made on that sale. And some tax treaties forbid taxing this. And there was a case in Nepal where the Nepalese telecommunications company Ncell was sold from a Swedish company to a Malaysian company. And they said that in that case, the Nepal-Norway tax treaty states that the tax is not payable, worth $360 million equivalent. And then they used, furthermore, the UK-Nepal investment treaty to arbitrate when Nepal imposed this tax later on after a hearing in the Nepalese Supreme Court that was brought together by public interest litigation by Nepalese civil society. So this is an ongoing trend. There are tens of such cases in arbitration courts. Many of the arbitration courts are secretive, and we would hope that tax treaties become more equitable. There are proposals in the United Nations Tax Committee to make sure that capital gains can be taxed at countries where companies operate, and that the rates at taxing foreign shareholders would be more equitable based on a UN model treaty. Therefore, updating treaties is important. And the UK should conduct impact assessment, as Ireland and Netherlands have already done, to see if there are any harmful impacts of its treaties with the global South countries. The other concern we highlight often is that countries provide secrecy and low taxation, especially to foreign companies. While the UK itself doesn't provide that, the UK has overseas territories, especially Cayman Islands, British Virgin Islands, which provide low taxation and still lack of transparent company ownership to ensure that tax authorities, for instance, from India, could discover that a company has a subsidiary in one of these UK territories and to tax it effectively. It is difficult for Indian revenue authorities or for revenue authorities from Ghana to gain access to company information in British overseas territories of Cayman Islands, for instance, which was #1 in the financial secrecy index of the Tax Justice Network in 2020, the latest index. The UK mainland has a good practice on this issue, where company ownership is on a public registry. So shareholders above 25% are listed. And we see that about 10 countries across the world have implemented this. same level of transparency, and 80 countries have some form of administrative registry to understand who are the real owners of companies. However, this transparency is not yet in place for the UK's overseas territories. They have made a commitment to do so by 2023, and nor for the UK's crown dependencies that have a different constitutional position, including Jersey, Guernsey, and Isle of Man. However, they have said that they'd like to align, but they have given no timetable as of yet. So financial secrecy erodes revenue because you can hide wealth from revenue authorities, but also from money laundering authorities. And this is what we saw in the case of the Pandora Papers, the leaks of data. So I have a picture here of a box of Pandora, as in the Greek myth, and papers flying out of it, and the UK City of London as a financial centre in the backdrop. What we understand is that the City of London in the UK deals with secretive locations, such as its own overseas territories or other secrecy jurisdictions, to enable their clients to hide wealth. And we found that there were over 1,500 UK properties held by foreign owners, and over 330 foreign political persons were exposed in this leaked data. It would be important to improve transparency of property registries, in particular of foreign owners in the UK, to reduce the risk of money laundering and corruption, and also tax abuse and evasion. And that is the map of countries that have registries. And again, only 10 of these are approximately now public. And some of the opportunities really is to ask, when you look at the expenditure side of the budget, ask also the revenue side. Where did the money come from? And make sure that you also ask, what are the tax gaps? What is the revenue that's not collected? And for global north countries like the UK, we need to ask for them to do impact analysis of their tax treaties and tax policies that they use to regulate the taxation of companies, so that they don't provide opportunities for not paying taxes in other countries. All of these are part of the Sustainable Development Agenda, financing for development, and increasingly human rights treaties and treaty bodies are investigating these. So when you make submissions to the Universal Periodic Review or other places where you monitor enjoyment of human rights or follow up SDGs, it is very important to raise these issues, because without revenue, there are no rights, and SDGs will be unfunded. There are opportunities at international bodies to improve transparency and improve tax cooperation, so that we collect the right amount of taxes in the right place to fund rights for people living with disabilities. Thank you.
Thanks so much, Matti. That was really amazing, and wish we could have listened to you for even longer. Thanks so much. I hope we'll have a chance to return to some of those issues in the questions. Now we're going to be joined by the second, we're going to look at the second of our Global North case study countries, and that's Switzerland. And for this, we're delighted to be joined by Dominik Gross. Dominik is a historian, and he's Allianz Süd's policy advisor for tax and financial policies. He's a Eurodad board member, and he represents Allianz Süd in the steering group of the Independent Commission for the Reform of International Corporate Taxation and the Global Alliance for Tax Justice. Thanks so much for joining us.
Thank you very much, Polly. Great to be here, and nice. Thank you for the invitation.
Thank you. Now, we wondered if you could just first talk us through briefly why Swiss government policy on tax has the potential to affect government budgets in the Global South.
Yeah, first of all, Switzerland has one of the highest densities of multinational corporations present in this country. 2019, the Federal Statistical Office found nearly 30,000 businesses in the country formed part of a multinational group and employing around a total of 1.4 million people. So Switzerland is obviously one of the major centers in the world when it comes to multinational corporations resident in the country. And secondly, Switzerland is also a highly federalistic country, so that means every canton in Switzerland, so every state has its own taxing system or its own tax system, and is actually independent in defining the corporate tax rate in the canton. And about half of Swiss cantons are actually below 15% concerning corporate income tax. So that means there are actually below 10% below the global average at the moment on the global level, as Matti already said. So that makes it actually very attractive for multinational corporations to shift their profits to Switzerland, which is one of the major problems in the global tax system, right? Profit shifting. And scientists among Gabriel Zuckman, which is an economist at the University of Berkeley in California, actually estimated last year that about 100 billions yearly are shifted by corporations to Switzerland, which makes about 40% of revenues coming from corporate income tax in Switzerland are based on profit shifting from other countries in the world. Unfortunately, we don't really know how much of these profits are shifted from countries in the global south, although we know that Switzerland is a major center of the extractive industry. So it's highly possible that this industry is shifting a lot of profits to Switzerland due to the low rates in the concerned Swiss cantons. That's one part of why policy or the policy on tax is actually affecting the global south in Switzerland. The other is obviously the whole story around the banking secrecy in Switzerland. Maybe we can discuss that a bit further later.
Thanks so much. Now, one of the things that also came up in Matti's talk was the new global minimum tax rate. And on the surface, it might sound as if that solved part of the problem. Is that really the case?
No, actually not. I mean, Switzerland is in a way the perfect example for it, because as I already said, the national average of corporate income tax in Switzerland is below 15% or almost around 15%. And there are a few or quite a lot of cantons which are below, which some of them are going down to 10 or 9% even. So that means that Switzerland is an example for how that you see that the global minimum tax, which should be at 15%, is actually too low, because it still makes sense to shift profits, for example, for the extractive industry. If you have an average of the corporate tax rate, for example, in Zambia around 25 to 30%. So if you shift profits from Zambia to Switzerland, you still profit of around 15%, a tax rate which is actually 15% lower than the one in countries of the global south, especially in Africa. So that means that basically the global minimum tax is just too low when it's around 15%. And the other issue is that actually that the minimum tax is not like an instrument which you can actually stop profit shifting. It's not a system of which is like practically stopping profit shifting. So this combination of these two elements of the minimum tax are actually not really. We're not really expect that this will end profit shifting to Switzerland.
Right, thank you.
You're welcome.
I'm going to move on briefly to another aspect of your work, because I know that you also work on the prevention of unsustainable debt crises. Could you talk us briefly through how that issue, unsustainable debt burdens, links to Switzerland?
Yeah, that's actually mainly an issue of private companies or of the private sector. I mean, Switzerland is not is not a big provider of credits on the bilateral level to southern countries or even to other countries in general. So it's mainly an issue of the private sector, and there obviously of Swiss banks and the extractive industry also when it comes to research, to resource-backed loans. And actually Switzerland is very intransparent in this kind of sense. We don't really know how much debt is held by Swiss banks or Swiss extractive industry companies in respect to countries from the global south. But it's obvious that because these two industries are very strong in Switzerland, that this is an issue if you look at the percentage of private sector loans going to the global south.
Thank you very much.
You're welcome.
Finally, just to zoom out a bit and looking at the different issues we've discussed on tax and on debt, how do Swiss policies in these areas potentially affect the enjoyment of rights by persons with disabilities?
Yeah, that's actually in a way very simple. I mean, as long as profit shifting to Switzerland is very attractive for when you look at the tax policies, as long as profit shifting is very attractive concerning corporations present in Switzerland, it just undermines the domestic revenue mobilization in the global south, and that obviously is a problem when it comes to public services, which are very important for people with disabilities in the global south, which rely on these public services. And when it comes to that, it's obvious when like countries in the global south have to pay a lot of their public revenues to countries or to private sector agents who are actually giving loans to these countries, which are highly indebted and therefore pay a lot of interest on these debts. This is also affecting the possibility or the ability of the state to provide decent public services to people with disabilities.
Thanks so much. Thanks very much indeed for sharing a little of your expertise on this. And again, I hope we'll be able to come back further in the questions.
Pleasure.
Just to flag that in parallel with this event, we're actually today launching a fact sheet that looks in a little bit more detail into some of these issues and unpacks how some of Switzerland's economic policies may affect the rights of persons with disabilities in the global south. And we were very lucky to benefit from Dominik's advice a lot when we were preparing that. I think a link to the fact sheet can be found in the chat, and it's definitely going up online today.
Thank you very much, Polly, on the information on the fact sheet, and to all the panelists for their interventions. So I would like to invite you all to join me for the discussion, and please turn your videos on. You can, dear participants, you can just put in your questions into the questions and answers box. And I would like to start with you, Dominik. You explained very well the situation in Switzerland and the impact it has on persons with disabilities in the global south. So kind of the obvious question is, what is your recommendation now to go forward and to take the issue discussed forward?
Yeah, first it's about transparency, as Matti already said, in the general context of the global tax system. I mean, as I said, we don't really know how much debt or how private sector or countries in the global south are actually indebted in respect of the private sector in Switzerland. So this is a very intransparent sector, or it's a difficult issue in policies when you try to make policies in favor of the people in the global south, when you even don't really know what the role of the private sector in Switzerland is concerning indebted countries in the global south. And then the same is the case in regard to tax policies. I mean, it would actually be very easy for Switzerland to introduce public country by country reporting on the global level, since so many multinational corporations are present in Switzerland, right? And this would actually bring a lot of transparency to the actual structures of multinationals present in Switzerland, and therefore would make it possible to actually estimate their profit shifting to Switzerland, or their strategies of optimizing taxes in regard to their presence in Switzerland. So that, I would say, are the two main issues we should face when it comes to transparency. And then Switzerland should actually also think about how, if we introduce the global minimum tax, which actually should be the case, as the federal government already announced, we should actually think about how we introduce a minimal tax at the end, which helps on a technical level also the countries in the global south, because this is not provided in general or just automatically by the system which the OECD is proposing for the global minimum tax.
Thank you very much. So turning to you, Matti, I mean, the Financial Transparency Coalition has members across the whole world. Can you give us an example of how corporate tax abuse is affecting government revenues in some of the countries that you work?
Yeah, of course. I think there are quite a few examples of that. We published a recent report on trapped in illicit finance, and we looked at both Zambia and Nepal. And in the Zambian case, a large mineral company, First Quantum Minerals, Canadian headquartered, it will have about 200 subsidiaries. And what it tends to do is it tends to, of course, produce the minerals in Zambia. It was copper in this case. But the copper, when it leaves Zambia, it will have costs attached to it from, let's say, a Swiss affiliate that gives it management services. So you inflate the cost, in our view, of how much costs you declare in Zambia, and you somehow render the company in Zambia not very profitable, because the corporate tax rate is about 35% in Zambia. So you give them also expensive loans, which are above the interest rate at the market. So that's a kind of a financial way of profit shifting, as Dominik said. It's a term that needs a lot of unpacking. So you inflate the costs at the local level, and you shift the costs and you report them as profits in jurisdictions with lower corporate tax rates, such as Switzerland, Ireland, or indeed zero corporate tax jurisdictions like the British Virgin Islands. That's profit shifting. So what we say is, you need to say where you made your profits so that civil society, journalists, parliamentarians can scrutinize that. We call that country by country reporting. That needs to be public. And then we can make informed decisions, including the revenue authorities need to see that, so that they can make adjustments. And there are laws which are called anti-avoidance laws that you could already use to make adjustments, but revenue authorities lack the information to adjust tax payments. And when they adjust, they get sued in courts, both domestic and arbitration courts internationally, subject to trade and investment treaties that take a very long time to resolve internationally. So those are just some examples. Another one was selling a company. So when a mine or a telecoms company sold, often there's a capital gain. You bought it at a lower price, you sold it at a higher price. Many countries have now updated their tax laws to tax that capital gain. But then the Norway-Nepal tax treaty negated Nepal's claim on taxing the capital gain, such was the argument. However, the actual transaction went through Netherlands and St. Kitts and Nevis. So Nepal said, no, we have the right to tax this. And by that time, the company selling it had already left the country, Telia of Sweden, and then the buyer had to pay it. under contractual obligations, and also they wanted to stay in the country, Malaysian company. And then the Malaysian company sued Nepal for an unfair tax charge. This is similar to the case in India, where Vodafone was charged for capital gains tax dodge, and now Coca-Cola is charged in Nepal again. The bottling company was sold from a South African to the headquarter company. So there's I don't know if these examples illustrate a bit of what's going on. Yeah.
Yes, absolutely, they do. Thank you so much. That's very good. So I'm also wondering, and maybe I think that's a question to all of you. So how, based on all that experience you have and all that we know and the problems that are around, so how can actually disability advocates and economic justice advocates work to better or work together actually to more effectively advance those concerns and maybe also reach or come to better solutions?
I have one example of that. So we launched a project called the People's Recovery, Centre for Budget Governance Accountability in India, who work on the people's budget, very much part of that. And we linked social protection to fiscal policy. And we compared how much corporate actors, either tax incentives or loans they got, and they got the vast majority, 63% of all COVID help in 9 countries in the Global South, and only 22% in the Global South went to social protection. And I think that illustrates a way of which we should work as tax justice, financial transparency advocates, with advocates who work on social protection, and especially those who are the most marginalized groups, including persons with disabilities as a group, including gender, including minorities, to make sure that that money goes where it's most needed. And provide our expertise, if you like, to scrutinize the revenue side of the budget and the missing revenues that are somewhere in Switzerland or the British Virgin Islands.
Meenakshi, you were nodding, so can you maybe also share your experience in that field, and then I'm happy to turn over to you, Dominik.
Actually, as a part of our work, we are working with Center for Budget and Governance Accountability to produce a chapter on persons with disabilities for the last 10 years for their People's Budget Initiative. But when we look at how both sectors work together, basically we need to be in a position to ensure full and effective participation in every issue. Say, for example, if an organization working on public financing is looking at health, basically how we can promote health in a particular country, then it's almost like it's not the issue of persons with disabilities. It shouldn't be like that. We should be on the table, and how this intersectionalities work. This is what we have been telling different movements also, like the gender movements, the budget movements, like make it cross cutting. So if you're looking at education, and if you're looking at and for example, if you're looking at revenue, there are tax exemptions for families of persons with disabilities in India on the direct taxes. But is it the right way? I mean, is it enough? And how? And keeping the indirect taxes on the higher side. And when majority of persons with disabilities live below poverty line. So under the revenue discussions, they don't, it is not participated. So what we are expecting, the economists and the movement, is that to work across all dimensions and across all sectors when it is being worked, and also have indicators. So how it's going to affect this particular population, like if this is going to be the, so there has to be an understanding on both sides and involvement. I mean, involving persons with disabilities is effectively is very important, and also taking the message in a very simple manner and accessible manner to persons with disabilities. So many of the journals, many of the information that is produced by the key players in the budget partnerships, they are not accessible for persons with disabilities, and it's not simple. It's not in a manner in plain language. So I think it's on both sides. We need to engage, and for us, things will have to be accessible, and we should be allowed to participate across board.
Thank you, Meenakshi, for raising the basic principle, one of the basic principles of the CRPD, of the participation of persons with disability, which of course is also key in the aspect of economic policies. Dominik, you raised your hand.
Yes, I just want to focus on another issue concerning the UN level, right? I mean, if you look, for example, Switzerland, when you look at country reports regarding tax bodies, if it's like the CEDAW or the CRPD, we always recognize, or we always see that Switzerland is actually, or the Swiss government is actually not reacting to interlinkages between, for example, women's rights or rights of people with disabilities, and tax or issues regarding the financing of these rights in regard to Swiss tax and finance policies. So I would say it would be very, very important to put pressure at the UN level on countries like Switzerland, which are actually not really fulfilling what the UN bodies are asking for them in regard of their analysis of enabling human rights in their tax and finance policies. And we just see that, for example, the Swiss government is actually refusing to do spillover analysis or impact assessments in this regard. And so we don't really have the instruments to put these issues forward on the political level in Switzerland then. So maybe we could think more about these interlinkages between UN levels and national levels in this regard.
So I have a question for you, Meenakshi. During your presentation, you said you were talking about allocation for disability. So does it mean the health cost, meaning assistive devices, rehabilitation, cataract operation, or does it mean social or economic development, for example, inclusive education, inclusive entrepreneurship?
Yeah.
Can you give us an answer?
So actually, yes, actually my first mention of percentage to GDP of social sector, which is at 0.05%, is across sectors like social protection, education, employment, and skill development, those development sectors I was talking about. When I spoke about the nodal department, the allocation reducing to the Department for the Empowerment of Persons with Disabilities, here in India, the supply of assistive devices rehabilitation doesn't come from the health services. It comes from the social justice pool. So I was referring to that when I mentioned specific allocations for persons with disabilities, because we have to be taking a twin track approach, and across sector, we also need specific focus for persons with disabilities in order to ensure reasonable accommodations and the support services that is required, which is the primary responsibility of the Department for the Welfare of Disability Affairs at the union level. Yeah.
Thank you. And so maybe a question to you, Polly. We've heard a lot about the importance of tax justice, debt justice, and disability in there. So you're suggesting that actually disability rights advocates should now drop all the other issues and really focus on these economic questions, because there's just a lot of money at stake.
Yeah, well, I mean, the economic questions are fundamental and they're fascinating. So I definitely encourage disability advocates to look at them. But at the same time, no, I'm not saying that disability advocates should drop everything else that they're looking at. I think rather, as we've heard today, there are some really cool opportunities for the movements to work together a little bit more. And if disability advocates just have a little bit of time, that can be as simple as just following some of the campaigning movements that Matti and Dominik are already part of, or more local-based campaigning movements like CBGA in India, following their campaigns and supporting them. But if advocates have a little bit more time, we've heard there is a sort of growing momentum around CRPD compliant budget work. And I think that's a really interesting evidence base for some of the wider campaigns on economic justice that are going on. So I think if our two movements are more in contact with each other, there's a really great opportunity to bring out some of the links between the specific cases of budget gaps and some of the wider structural issues in the economic system that are making those budget gaps even more serious. So I hope that this can be a first step to keeping our movements in touch a bit more.
Yes, absolutely. I hope this will be happening, and this webinar is kind of a first step of of linking different people and actually also garnering interest in either disability rights issues or economic justice questions. So I would like to thank you very much, all the panelists, the interpreters, as well as the captioner for this webinar and for the discussion. Thank you for participating. The recording will be available very soon on our homepage. You can find the link in the chat box. And this is also where you can find the link to the Swiss fact sheet. So please have a look. Thank you very much and have a great day.